Welcome to our webinar, Finding Cash for Your Business under the CARES Act, presented on March 27th, 2020 by R.C. Thornton and Associates. If you would like to sponsor one of these webinars at no cost for your colleagues or with your trade association, please call our office for details or send an email to info@rcthornton.com. It is free, and we would love to work with you on your specific topic of interest for your business. It is my pleasure to introduce you to our speaker, Chuck Thornton of R.C. Thornton and Associates CPAs. Chuck works extensively in the tax area. He is an author, lecturer, and frequent webinar presenter. His firm's mission is to help clients achieve financial success, and that means saving taxes. Chuck's background includes being a CPA, personal financial specialist, charter life underwriter, and certified financial planner. He is a graduate of New York University with a master's in taxation. Please don't hold this against him, but he did work for the IRS a long time ago. He is also owner of R.C. Thornton Financial Solutions, LLC, another CPA entity specializing in investment planning. Welcome, Chuck Thornton.
Well, thank you, Kit. I appreciate that. And we're going to be talking about the current status of the CARE Act. Okay, let's take a look at this. Now, by the way, every day, even getting prepared for this, I was out of date by one day on different things because they were constantly passing things and pushing them back and forth. This slide was put together basically last night in the morning from about 1 to 4. Using what was current at the time, and that was on March 27th, on Friday. The Senate had passed this March 26th. There was a Republican that was a holdout. The question was the House going to get it done by the 27th? And when I did the seminar earlier, I got a bing on my text mail, and it said the House had basically passed this. So that means the procedural issue by that holdout is not relevant anymore. When is Trump going to sign it? I wouldn't be surprised if he signs it today or tomorrow. I can't imagine he's going to wait till Monday. So I would say this is basically a done deal because he's already said he's going to actually sign it. Okay, now I'm going to talk about the real pearl that's in this program that works for manufacturers, restaurants, lawyers, dentists, accountants, retailers, and things like that. So therefore, you might have to carve this up a little differently in your situation, but the rules are pretty much the same. They enacted today the Paycheck Protection Program. Sometimes they call it the Payroll Protection Program. I've seen it called both of them, not to be confused with a national known payroll provider. And this is a small business administration loan under the long existing program known as 7A. This is not the economic injury disaster loan. That some of you may have been aware of and maybe even had already started applying for. That's what came out of prior economic disasters, which have always been on the books. And you could have done that online, and some of my clients were actually starting to do it online. That's not what this is, and if you did happen to get one, since Arizona is a disaster recovery area, you can convert this into a PPP. You might say, why would I want one over the other? I'll just tell you in a nutshell. The PPP is not a required personal guarantee, doesn't require creditworthiness, it does not require collateral, and the EIDL requires all of that stuff unless the loan's under $25,000. So need I say more, the PPP program is the way that you actually want to go on this. Okay, key takeaways. There's this term called covered period, February 15, 2020 through June 30th of 2020. This term will become more relevant later on. So just kind of remember when we talk about this thing called a covered period. But here's some takeaways. It's a low interest loan, not more than 4%. It's for covering certain expenses such as rent, payroll, employee health insurance, paid leave, interest on mortgages, and other debt obligations, including rent, that were incurred before February 15th. So that's probably most businesses. This is not geared for someone who decide to open up their business on February 15th, but someone who's been established for a while. Second takeaway, guaranteed by the SBA, which means banks are glad to do this. No personal guarantee, no collateral required, which means you're glad to do this. And the borrower and the lender fees are waived, which means that's great. What happens is the SBA is going to pay the closing costs. No prepayment penalties if you decide you don't want to continue this loan. The deferral of the payments will be 6 months to 1 year, depending on what you negotiate with the bank, and maturity of 10 years from the balance after reduction for any loan forgiveness, which you heard that word, loan forgiveness. We're going to talk about that in a moment. So the question would be is, who wouldn't want this type of loan? This is probably once in a lifetime you ever see a loan with these types of terms. Now, there's partially forgivable loans. I'm going to get a little bit more detail on this, but with the application forgiveness filed with the lender, there is a period by which you can say, okay, now that I owe you X number of dollars, I want X number of dollars minus something forgiven. In other words, I don't want to have to pay anymore. I want you to reduce my principal. What technically happens behind the scenes is the SBA basically purchases that portion of it. You go to the lender, you do your computation sheets after a certain period of time, and they issue a forgiveness of indebtedness. What this basically is to provide a strong incentive for employer to retain employees. That's where a lot of this comes in. And when you keep on thinking about that and you see the computations on this, you can see that that's what it's really geared for, which is something we might want because we might want to keep our workforce or keep people in place. If we let them go and then the economy recovers, we may be starting over a whole new training program for everything. It's effectively a partial revenue program to allow affected businesses to somewhat hibernate through the period of severe disruption without having to change all their employee structure. It's very generous, low barrier to entry. It's almost unbelievable. You'll probably never see something like this again. You don't need to actually show economic harm. You don't have to say, look, let me prove that I have damages because of this economy turndown. The only thing you really need to do is you need to do a good faith certification that the current economic conditions necessitate the loan and that all funds will be used to maintain payroll and certain expenses. I'm still here, but I'm trying to get my slide changed. Okay. Is the forgiveness of any of this debt taxable? Here is another great kicker. Usually, forgiveness of indebtedness is taxable with certain exceptions. And the answer to this is no. The forgiveness of indebtedness is not taxable, meaning you have a free economic gain here. And even though you may have used that loan to pay expenses, which you deducted, there's no adjustment for that. So there is another benefit of having that debt basically forgiven. So you really want to look into this, and this thing starts actually probably Monday. Who are the lenders for this? Financial institutions that have SBA approved lenders. Most major financial institutions, banks, already have in-house SBA approved lenders, which means in the old days you had to go down to the SBA and do all this paperwork. Now, and sometime back, to tell you the truth, there a lot of banks could have done all the paperwork and approved you and just gotten the guarantee from the SBA. They've been around forever. They've been around for the 7A program and something referred to as a 504 program, which is an interesting thing, but is not relevant to this program here. It's a 7A. The Treasury Department can come out and approve up the lenders, but as of we're speaking right now, it's only the SBA approved lenders at the bank. That means banks with SBA programs may offer and process these loans. If your bank does not have an SBA approved lending program, you're not going to be able to do this at your current bank, is what it boils down to. It's not necessarily go directly to the SBA, which is what was required with the EIDL. That was the economic disaster loan because Arizona was declared an economic disaster. So now you're going to go talk more with a person who hopefully has some experience in this and can help guide you through it. Now, here's some interesting eligibility requirements, and I want to point this out. First of all, it's for businesses with no more than 500 employees. If you're over 500 employees, don't turn this off yet. I have more to tell you. 500 seems to be the key breakpoint for the Family Leave Act because over 500, they have their own set of rules. And also, too, it seems to be the key thing for this, too. So in general, law firms, CPA firms, medical practices, small manufacturings, even anyone up to 500 employees, let's face it, 450 employees is a pretty good sized business. It can include, this is the kicker, it can include businesses that have over 500 employees, but they don't have more than 500 employees per physical location, franchises, operations, and stuff. They may have 2,000 employees, but they may only have 50 employees per location at the other place. You can still qualify. It's assigned a North American industry classification system code with starting with 72. That is basically a standard industrial classification SIC code. And that's basically a combination in food services. So any large franchise type operations could still qualify for this loan. So don't think that just because you're over 500, you might as well turn this off. There's other types of nonprofits, believe it or not, and companies licensed under the Small Business Investment Act. We're not really trying to address either one of those, but nonprofits can maybe get loans too. How much can you borrow? Now, I'm going to start going through some of the accounting stuff here. I'm not trying to turn you into an accountant or a CPA. I just want you to get some feel for how it works. I'm going to encourage you, you need to partner with your CPA. If we're doing your work, hopefully that would be with us, to do these calculations to shepherd you through at least the financial aspect of it. But here's how the loan works. The maximum amount is the lesser of 10 million or a calculated amount. Almost everyone is going to be a calculated amount. It equals 2.5 times the average monthly payroll based on the prior 12 months. So if your payroll was, I'm making up a number, $20,000 on the average per month during the prior 12 months, then your loan would be $50,000, 2 times 20. If your payroll was 50, then it would be 2.5 times the average 50. That could be 100 and something thousand dollars. Payroll includes not only wages, salaries, it includes retirement contributions, which means there may be a little strategy when these retirement contributions get paid, healthcare benefits, and other covered leave and expenses. Except for, by the way, if you listen to our presentation yesterday that we had, if you're taking credits for those wages for covered leave, then you cannot apply that within this program. It excludes the amount pays to employees which exceeds $100,000. Loan forgiveness. Okay, so now you got your loan based on those costs, $300,000, $400,000. Remember, they're trying to get you to continue with your employees. They're trying to encourage you not to let them go, which is probably what you want in most cases too. It's basically your loan forgiveness is computed. The amount of costs incurred and payments made during the 8-week period for payroll costs beginning on the date of the origination of the loan. You originate this loan May 1st. Basically, you go forward 8 weeks. The question is, were you successful in maintaining those costs that you used for purposes of calculating how much loan you could get to begin with? It includes interest on loans in place before 215. Related party loans, good question. We need to take a look at that. People who have loans with implied applicable rates might want to modify those to provide for interest rates, rent, and utilities. So it's pretty generous there. The reduction in forgiveness. Now, what happens is they say, okay, you've maintained your cost. Now let's take a look at the number of employees that you have and have you reduced that? Because you could have paid more to certain people. You could have paid more rent, and it could be you reduce your number of employees. So it's based on the equivalent full-time employees, which means full-time, or if you're part-time, you translate that into a fraction of what the full-time would be. It might be a half of a full-time. Now, again, if you're interested, if you're accounting ordering it, that's fine. You might enjoy this, I don't know, but I just want to show you some general calculations. Once we figure out the forgivable eligible costs, that's the 8 weeks worth of expenses that you incurred that are allowed after the origination of your loan. You take a numerator, you multiply that by a numerator, which is the average number of employees per month during the covered period. Here comes that terminology again. that comes back to February 15th to June 30th. Remember I said that covered period? Here it is, okay? So it's the average number per month during covered employees divided by the average employees per month from February 15th of 2019 to June 30th, 2019. Now you notice this is average per month. And so you can see what's happening is they're taking a baseline, which includes a little bit of the current period, and they're comparing during the covered period to see, did you maintain the same ratios? And if the answer is you did, then you might wind up getting 100% of those expenses for the 8-week period that we're talking about. There is an alternative. I got a little too zesty with my slides. There's another one that says it's the average employees per the month during the covered period, same numerator, average full-time employees are equivalent from January 1, 2020 to February 2020. That equals your forgiveness. You get to do both. You can see accounting, calculations, getting information to see this whole thing through. You might actually strategize. It's almost, I look at this almost like another tax law. You strategize as which way can you optimize these situations for you. Okay, the forgiveness that we just calculated so far is reduced by any reductions in employees retained compared to the prior year, and they look at the reduction in pay of any employee beyond 25% of their prior compensation, meaning now you're looking into not your dollar amount of wages, you're looking at did you reduce wages for any particular employee. And there's some flexibility if you're rehired laid off workers, so hence this might be an incentive if you have some laid off people to get them rehired before June 30th of 2020. Again, if it makes sense given this program for you. Okay, tricks and traps in applying this. We're gonna have a bunch of them. Now I'm gonna tell you that this law is so new. One of the challenges on this is that it's a moving target. It's not like regular seminars where the law has been around for 5 years and I give you a presentation with some interesting issues on it and the regulations and the administrative interpretations have all taken place. So what I'm saying right now might have a different interpretation literally next week. That's why you really need to make sure you're working with someone who stays up on how this is working. So once the law passes, you need to wait for the SBA to issue pertinent regulations. That could take you a couple of weeks. So in the meantime, here's what you need to do. You might as well check with your lender to see if they're an approved SBA lender. If they're not, this discussion with them is over. It doesn't matter. If they are not an approved SBA lender, then you might want to start shopping for banks that do have approved SBA lenders. However, there are a lot out there. They're going to be very swamped with this, and don't be surprised if they want your entire lending relationship to make this work. This is why you're better going to your current bank and you're going to talk to them to see whether they have an SBA lender. But if they don't, and you want to use this program, you need to start looking for a different bank, at least for this program. You can start pulling your information together in the meantime while you're doing this. And I'm now waiting for my slide to change again. Okay, tricks and traps in applying number 2. This has been proposed for quite a few months, so there's been a lot of argue points in this. But here is what we're finding as of yesterday, okay? Remember the thing that's changed. We took it upon ourselves over the last week to call up banks and just talk to commercial loan officers that we're aware of. Not necessarily SBA loan officers, commercial loan officers. Very few of them knew anything about this program. The ones they did, they said, I've heard about it. Now, I have no doubt that as we progress along, the SBA departments of the banks are going to make sure the regular commercial loan officers know that. But this was the status about a day before. I did a Google a couple days ago to see. If I was a bank, I'd be jumping over this. I'd be advertising on my websites and everything. I only found one bank 2 days ago in Amarillo, Texas, believe it or not, that actually was advertising, come and bring your PP loans to us. We're ready to do it as soon as the law passes. So you may need to be a little assertive. Sometimes commercial bankers may still say, I don't know what you're talking about. Oh, we'll get back with you on something they will probably, and a lot of them went through, oh, you must be talking about the economic disaster loan, which was a prior program that's still in existence. But as we talked about before, that's not the one you want. And they may say, oh, you go to the website to do that. That was for the economic disaster loan. So you may have to force the issue a little bit to get to the SBA person in your group. Now, what I found is by going to regular banks' websites and basically taking a look to see if there's any direct dial numbers to the SBA department, I find a lot of banks don't have that, which means you're stuck with going with your commercial lender that you're working with first to then ask them and interrogate them, who's your SBA person? And again, you might get interrupted with, oh, we don't need to worry about that. If you're looking for a new bank or a bank to do this, or you really haven't had loans before, you may not really have a personal banker, and you may wind up having to go down to the branch office, and that's the same type of thing. You're going to have to do some homework. Now, we do have one group already who's told us that we're ready to do this. And if you want to, you can send your people over, and I would just say, send me an email, chuck@rcthornton.com, and your phone number. I need to talk with you first to see whether they might be a good fit. So I already have one that's queued up, and I'm sure there's lots of them, but out of my searches, one bank actually got very inspired when I told them about the program, and they started jumping all over it. Okay, strategy. The 7A SBA program's been around for years. It is the only paycheck protection program that CARES is about. That's what yours is in. But it's done through the the 7A program. If your bank has an SBA section and they want you to wait because they don't have the guidance on this, you might ask, can I start applying for the 7A program and then convert it to the Paycheck Protection Program as soon as the bank will allow it? Why? You're going to discover here very shortly that basically there could be a shortage of these loans. So what information are you going to need? I just making this up from looking at that bank in Amarillo. Prior 3 years tax returns, copies of past payroll returns, financial statements, list of ownership affiliation, calculation of allowable expenses. That's something you or your CPA might want to work on, and calculation what you think you're going to need to do maximum forgiveness of your loan. That's not something your SBA person cares about, but you do. You want to be thinking why you take this loan. Where is my get out point? Is because that's when you want to start your loan origination. And so there's a little bit of calculation to think about how you're going to get out of this. Now, are there other programs and law changes that could help you in securing cash flow? Yes, there are. I'm going to mention a few, but we have a whole series of webinars we're doing on this. We did one on delaying the payment and filing of your income tax returns. We've done one on the Family Leave Act and sick pay program that's out there and how the credits are going to work. By the way, some of this PP loan will not allow you to use expenses where you took credits for certain types of withholdings on employees. So again, you need to really have someone think this through. Every provision in this law is pretty straightforward. It's when you intertwine them all together, that's where all the problems come into this whole thing. So anyway, here's a couple places just to whet your appetite for this. But again, very shortly after this, maybe another 3 or 4 days, we'll be going another round of these things. I guess I want to get you interested in coming back. The SBA economic disaster loan, we talked about that. You can still do it. And I understand, although I have not seen the text of any law, if you convert it, there might be a $10,000 grant that you get. I've had one person come back and tell me that. You can make distributions from your 401k plans and IRAs. There's a waiver of penalties on that if you're not over 59 and a half, and there's a 3-year repayment term. So I guess if you had a IRA with lots of money in it, it would be the ability to get an amount out. I believe it's $100,000. There's a 50% credit of up to $10,000 of continued wages paid to certain employees that are furloughed. However, this is one of the ones that takes that wage base out of your computation. They're not going to let you double dip and have both of them, as web boils down to. Okay, you can see I keep on flipping back and forth on these slides. I apologize. There's also some delay in tax payments, including self-employment taxes that you'll be able to do and pay that over the next 2 years. That grant I mentioned, restoration of lost carrybacks. It used to be that you could carry your loss carry back. Then they stopped that, and now they're going to like to go back at them in returns and give back losses for 5 years. Investment in qualified improvement properties. That's just, I won't get into that. And there's also small business debt relief, where if you already have existing loans, you already have an 7A or you have a 504 program, not only is it a delay in making the payments and interest and any fees for 6 months, the SBA will actually pay it for you. How's that? That's a pretty good deal too. So some of you may have some other backdoor methods. Okay, but my big focus was on the PPP. That's where all my time is today on this presentation. So now, will we have future seminars? You bet we will. We've already had 2. This is our 3rd one already in about 2 or 3 days. 2 of them are up on the website. You can always go to Speakers Bureau to look these up. This will be posted also, and we'll be recording and putting them in place. This is not one where we have a live presentation and then we record it. We're just recording it because we want to get this thing out quickly to everyone. If you're on our mailing list, it will automatically send you a recording. We go through and say, who do we think is a candidate? Who would be interested? We just don't send you a bunch of recordings that we think there's no possibility that you're interested. So here's how you can help us help other people. We do not believe that the average business owner knows about this. They may in 2 or 3 or 4 months. They may even 3 or 4 weeks. But there's a limit on these loans of $350 billion. And when they're gone, they're gone. So there's a budget on this. You don't want to wait to kind of figure this out. You want to get moving on it. If you want to take this mailing that we did to you, if you want to forward it to a friend that's in business, then they can listen to this also. Now, to let you know, they will need to register with their name and email number. I don't know about you, but I never want to give that information out to people. So sometimes I don't listen to things because I'm afraid someone's going to call me up and bother me and try to sell me something. I will pledge no one in our firm will use this list nor will anyone else to call up these people and say, can we talk with you? We will use them to continue sending them future seminar information that we think would be applicable to them. As any other place, they can always opt out. So we're not going to bother your friends is what it bothers too. It's a safe bet that they can get information and they can continue with this. If they want to contact us, that is up to them. So additional questions, first of all, if you're interested in the name of that one bank, I can get it for you. Give me a call. Better yet, why don't you send me an email with your phone number? And then let's talk a little bit to make sure it's a good fit, because I don't want to have lots of people going over this one bank and then finding out half of them it didn't really work for them and used up all their time. And I can save you time too. So we can have that discussion. If you have any other particular questions you want to ask, you can certainly do an email to me, or you can give me a call. Extension 15, by the way. You don't need to put a pound in front of that, and we can chit chat about it. Stay tuned. A lot more of these things coming up that you all are going to be very interested in, either the business owner, the individual, or both categories. There is something in this for everybody. Okay, with that, Kit, I'm going to turn it back over to you. And Kit, thank you so much for organizing this recording and listening to me talk. Okay, thank you.
Great. Thank you so much, Chuck. And thanks to everyone watching this today. If you would like to sponsor or collaborate on a webinar with Chuck, please call our office for details at 602-678-7067. It is free, and we would love to work with you. Thank you so much and have a great day.